right, this is Jeff Macke live. I'm Spencer Israel. That guy is Jeff Macke. And Jeff, what I thought we could do today is review a few of your recent options trades. These are trades that you sent out to your paying members over the last few weeks or months or whatever. And I thought it'd be helpful, a good exercise for us all, if you kind of talk us through your thought process, what you were thinking in terms of just like the trade itself, but also the underlying stock at the time and what you're thinking about them right now. Does that sound good?
Sure. And
right.
Kind of the big idea behind options. I don't consider myself a options trader per se. I use them all the time, but yeah, let's talk about my thinking and how I use them to enhance the portfolio.
Yeah. Okay. Here, I'm going to bump your sound up for a second. Cool. Let's do this. Let's start with, what's the first one? So Williams-Sonoma, this was a trade you put on, what, 2 months ago now?
Put on April 8th. And I remember the date because it's the day after my birthday, frankly. But I was just looking it up. This was a what if things go right trade. We were still kind of mired. We were about a week from the lows. Stocks hadn't really rallied yet. And the question was simply, geez, maybe this isn't that bad. So this is kind of a pure speculative trade. It's when you like a stock, you like the idea of it, but for whatever reason, timing, the macro situation, your confidence level is not huge, but you want exposure. I don't want to miss this damn trade if the market goes higher.
So what happened therein?
We crushed. It did great. It was the what if things go right trade right before an absolutely, historic type of rally in the market. Took Williams-Sonoma with it, not as huge as I think they should be doing. But what we did was I got long the September 220 calls and short the June 220 calls. The idea being that I think this is going to work its way higher almost no matter what happens. But that takes a little of the expense of getting long those Septembers out of it, which it did. And now that the stock has moved higher, we're sort of in the plus side of the trade. The cleanest way for it to work out would be if it closes on expiration at $219.99, so I don't get called out of those options. But either way, this gives me with what we have left, just kind of a free long side shot at the September calls, which I like quite a bit here as that stock works its way higher.
So this trade worked out very nicely, but you're still in it, right?
I'm still in it, still playing it, and the suspense, it's if it goes lower, you're just going to it's the idea of doing it this way is you're taking in some premium and that limits, again, your downside exposure. We're up, there's different ways to account for options, but, we're up a decent amount of 26% just in terms of the capital that we put into it. And you can do it 115 just because we got some money back for the short side. Either way, we're making money on a company that, I don't otherwise have exposure to, but I'm inclined to like. It's sort of, it's again, opportunistic, not a huge risk, not a huge, let's play these guys into earnings type of play, but just a way to get long a company I really admire and respect when things were looking kind of dour. If you look at that chart from April 8th, that's, can kind of go either way there. But the idea is if people start reaching for actual quality now, is this a chip stock? Is this going to be Micron and quintuple for us? Not really. It's a furniture company. But, right. So you just need the economy to not suck for this trade to work because it's the best run of these companies. And so I knew it wouldn't run away from us. And here we are. It's just kind of in the catbird seat. So that's a nice, it's a little scalp.
We were coming off of the invasion in Iran. When this was going on, right? So
yeah, and the market was just a slaughterhouse. March was not a glorious. It's easy to forget because we've had this historic rally, and everyone just has kind of forgotten the hard times, as is our wont as human beings. But things weren't great. Things weren't terrific, and there was a lot of skepticism. And we positioned the portfolio with the idea of, maybe things aren't a disaster. Maybe the sun's going to blow up, but it's not going to be in the next 3 weeks. So we should probably have some equity exposure.
Yep. All right. So this was obviously a retail call. Williams-Sonoma was a retail stock, but to just point, this really was a broader macro call on what if the world doesn't end.
And my thinking, Spencer, I like to just watch the basket close. I don't put that many eggs in it, and I just watch the crap out of them. Williams-Sonoma is a stock I pay way more attention to than most people. I'm a huge admirer, huge fan of the company. It's just in a really tough space. And so if you eliminate that really tough space, speaks to a lot of macroeconomic headwinds. Those haven't abated so much as they've just calmed down. And so folks are buying coffee makers and cups and decorative mugs and things again.
Right. So this next one, so this Victoria's Secret, this was not a macro call. This was a company specific. I think there's more good news in the short term here. This was a pre-earnings trade. This was an earnings trade.
Yeah. There's a Stanley Druckenmiller quote. I'm not sure if it's apocryphal, but it amounts to, listen, it's not how often you're right. It's not your batting percentage. It's how you do when you're right. And so I like to Texas hedge. We're long the common Victoria's Secrets already. Going into earnings, there was a ton of negativity. I kind of think it was based on a lot of funds just buying macro data and not understanding it. They get credit card information, they get all kinds of stuff, and they really didn't understand the Victoria's Secret. They were not sending out promotions, not because they were in trouble. They had fewer transactions, not because people weren't going there. It's because they stopped promoting product. And that's a good thing because it turns out that makes margins super fat. So going into earnings, I wanted to be bullish this. I was already long the common, but rather than make 40% of my portfolio nothing but Victoria's Secrets and just go all in on underwear, I decided that we can add some options exposure to this and grab a little something extra. And again, it's a Texas hedge. So that means that if Victoria had gone down, that would have been bad, but I didn't think it was. It was a high conviction position and I wanted more juice in it. And so this is just a matter of, again, making more when you're right.
And by the way, I should have mentioned this before, but with both of these trades, you're selling a leg to lower your cost basis.
Yep. So we're taking it down a little bit, and that's kind of what we're doing. We're taking down the cost basis up front early. Now in this case, it's a little different than Williams, because of course Victoria's Secret had the best quarter of anybody ever, and the stock went up nearly 50%. But that was great. And so we had the money that we made on the common, but because we also had these calls, we booked a really nice little kind of 32% extra bagger on there on a stock that we've done a ton of work on, had a lot of conviction on. And it's we're greedy little monkeys just as human beings, Spencer. I mean, at least in this family, I don't discourage it. Meaning, if you're going to win, let's go ahead and win big. And so, the best thing about your stock going up 50% a day is you've just kind of caught lightning in a bottle and you're super lucky and you feel great. And then that's immediately followed by regrets that you didn't bet more. So this takes care of the latter a little bit by adding some call exposure. And again, not in an unfettered way. The best way to do it would be to just have been long the calls, which I frankly kind of am sometimes inclined. People's risk tolerance and their situations vary, all the standard disclaimers that you give for a real reason. If you're 75 years old, you shouldn't be day trading Victoria's Secrets with your last penny. But, if you want to do it in kind of a more conservative way, this is a nice way to add to a position you already have. And it turned out to be pretty great.
And you don't discriminate. You'll buy calls or your trade options on a stock that you don't own the underlying, right?
Oh yeah, all the time. Which is the more conventional way to do it. The Texas hedge, that's not exactly a conservative strategy. To get long and then go out and get some call exposure strikes some people as kind of insane. But you know what? It's particularly if you're going to sell some in the beginning and take your costs down, it's not that outlandishly inconservative. And it speaks to the idea of you got to make a lot of money when you're right, because you're going to get kicked in the 5-hole plenty of times in this tape and any other tape. So let's go ahead and cash in and make sure that we collect more than our share of the winnings. And so this was, it's the big, huge birthday cake of the day was the rise in the common, and the nice candles on top were the call options that we have.
So in the here, let me bring the chart back up. So Williams Sonoma, you were long the Septembers, short the Junes, and in the Victoria's Secret, you were short the Junes, long the Septembers, right? So both of these were, would you say, intermediate duration trades?
Yeah, and Victoria's Secret, it would have paid off more. They're bullish though, but yes, they're definitely kind of intermediate term, and you're just betting on this working its way higher. Victoria's Secret went fast, so we ended up, but that's fine. It's a small price to pay. Tip your dealers when you get blackjack a couple times in a row, and if your hedge works out against you, if you're positioned right, you're going to make much more on the long side of the trade than you would otherwise.
When you're looking for one of these trades, are you looking for a news catalyst or just a general change in trend, right? Or both, or is there something else that you consider?
In the case of Victoria's Secrets, you had really expensive options that I wanted to take some of the price out of them. So the volatility was pretty high again because that huge short base. And so I knew I wanted more exposure.
But also they had earnings like the next day or something.
They had earnings
right?
the next day. Yeah. And that's one of the reasons the volatility was so high. So it's like, geez, I want a taste of this. We've been getting like a big move is 20%. 20% is a huge reaction to earnings and probably not really justifiable and not something you want to buy lottery tickets in all the time. This turned out to be twice that. So, it won much faster than expected. I'm not going to apologize for picking up an extra 30% on our trade. If you did 10,000 on each of these, you made about $8,000 instead of just making about 4,500 if you would have stayed long the common, assuming a $10,000 position and everything, which is just kind of what I do to standardize the math.
Yeah, and that Victoria's Secret not only did it gap up, but it's by and large it's held those gains. It's held most of those gains, right?
Right. And you kind of expected it, or I did anyway. It wouldn't shock me still if it filled that gap over like 65 was the old all-time high. And if it filled that gap, that'd be great. I would love to load up on it more. I still think people are kind of bonkers to be betting against. Don't bet against companies that are putting up mid-teens comps. Like there are so many bad retailers out there. Go listen to the Lulu call. That's what shorts sound like. Listen to Nike kind of staggering around and tripping over themselves. That's what a short sounds like. A short doesn't sound like we posted 13% comps while raising prices. That's usually not a great combination for your bearish position.
Just out of curiosity, how many open options trades do you have right now?
We got about 6.
6?
Yeah.
All right. Not bad. Yeah. And you're doing one new one a week. So that means we
do one new one a week. And a lot of those are shorter term. It's where I rather than during earnings, daddy likes to gamble a little bit. And so volatility goes much higher. It's in terms of, if you want to get a little closer to Graham and Dodd and the other conservative financial types with the deep voices, I do long-term options. And so I'll just get long leaps in addition to just the common, which again is Texas hedging. You're nakedly long in 2 different ways, but you're just adding to the bet a little bit by betting on the longer term trend.
Yeah, I'm not gonna lie. The first time you used that word, or that term, I had to look it up. Right? What is it?
Yeah, it might be. I don't know. It's one of the first guys who I ever talked to about this stuff was Richard Rainwater, who was brilliant and a Fort Worth legend. Got it from him, so blame me. Blame him. He's long past and tremendously well respected, so no one's going to give Richard shit.
I mean, it makes sense when you think about Texas is go big or go home, right? So
yeah, exactly. It's buying oil's futures with the money that you make off your oil exploration business. Right. It's like what would be more fun is that be richer, to be even wealthier. Yeah. That's more fun than being less wealthy. That was the basic gist.
All right, so you put on a new trade this morning, in fact, and one of the more long duration trades that I can remember from you. This one is going out like a year and a half, right? So
it is.
You've got time, and as I mentioned, you're putting on a new trade every single week. If you want to get access to Jeff's options trades, he puts them on pretty much every single Wednesday before we do this show. The link is in the description below on YouTube. You find this video if you're watching it on Twitter, if you're watching it on stockmarkettv.com. You can go to stockmarketmedia.com. You can find Mackie's page there and sign up. But if you're watching on YouTube, use the link below. You know what? I'll throw it on the screen as well. Let's just put it on the screen real fast. It's kind of
throw it on the screen for the nice people.
Kind of a long, obnoxious URL. I don't like doing it normally, but for you guys, I will. So anyway, you sign up. You get Jeff's options trades every single week, but you also get the stocks that are in his portfolio, right? That he's doing the options trading around, right? But it's these are like your long-term high conviction plays, right?
Pretty much, yeah. Best ideas. There's a lot of different things that people call them. Best stocks for the market now, I believe another person that's a newsletter writes. Yeah, just there's a lot of things that people call it, but I limit the portfolio to about 10 of my best ideas, and then I just sit there and pick at them and try to figure out damn way. It's if there's a reason to be short-term skeptical, I'm not adverse to hedging the idea. It's for the most part, I tend to lean into things really heavily on the long side, and my risk control in that situation is just doing a lot of homework, which I share with the folks who subscribe, because we don't do this for free.
Right, exactly. So there's the link up on the screen. You can get Jeff's options trades, get his best ideas list, and his weekly portfolio review, plus access to the guy himself. You can ask him questions and have him respond directly to you if that's your bag. Jeff, we'll talk tomorrow on the morning show. What should I be looking for? Are we still in earnings season even, or
we're having a glorious? Good Lord, Spencer. Have you gotten a lot of emails about Casey's General Store this week? Because I hassled people about that pretty much nonstop. My job is to put crap like that on your radar, because nobody's talking about Ankeny, Iowa's one public company. It might be the only public company in Iowa. That wasn't a stock that I heard a lot of people chitter-chatting about prior to this week. Cracker Barrel, that was left for dead.
Cracker Barrel actually was at the top of my my scanner this morning. I saw that.
Was it? It was also at the top of your freaking email box yesterday, because we were talking about it for the people for free. I was just saying, hey, look at Cracker Barrel. And I pointed out that, remember when Cracker Barrel went down 60% last year because a bunch of bots decided that everyone was outraged. They took the old redneck off the logo.
Oh,
that turned out to be a fake story. So, you know what? Just said maybe take a look at Cracker Barrel, because maybe we're not sliding into the sea. And also interesting to note that represents the deep South and the deep Midwest in terms of what the consumer is doing. The Casey's, you know what they sold a lot of last quarter? Pizza. Have you heard anyone else on God's green earth saying right now, the GLP-1s are just leading to enormous pizza. There's people, we can't even stay in stock in pizza at our gas station. No. That's a really well-run company, Spencer. If you can sell a lot of pizza at your gas station where you can also pick up automotive parts, that excites me. That stock's up 300-something% for the last 3 years, boot stomping the Mag 7 and just kind of being sexy in the world of everything other than chip stocks. And they sell gas, automotive parts, and it's a general store in Iowa. It's beautiful.
I have to look up. I don't live near a Casey's General Store, and I've never actually been to one, but I've driven past it in my travels. I want to see where
you've probably flown over it multiple times in your travels as well. It's a nice chain. They're quite popular. Again, great comps, even ex gas, and so it's not just an inflation story. It's just a good company, and worked off a trend line beautifully. Had a nice purple crayon right in there in support. Bounced exactly where it should. It's a glorious feel good story for the folks. But a lot, it's if you're inclined to sort of trade, what I commented on in the newsletter and what I stand behind is there's not a lot of alpha you're going to create watching the Apple release of their software intentions, because everyone on the planet is watching that, and who the hell is trading that? That's crazy. You've got these companies that no one wants to look at, think about, or talk about. Lovesac, the guys who put speakers in your couch,
Dude.
They report this week. That moves like 40% every time they open their mouth, just because it's such a bonkers idea and the name's fun to say. It's a little naughty. It's a nice companion piece to Victoria's Secret, if you will. But they report this week. Restoration Hardware is always a little bit of an acid trip for those of you who don't take drugs. It's nice. I like to just kind of think about the old party times, college days, and listen to me some RH.
Who said you need tech to get beta, to get juice? You get a lot of juice in these names, right? You get a lot of juice.
Up 33%. How's your tech stock doing? I don't know. It seems like the market's kind of crap, but I'm having a good day, so that's just fine. IMAX, not a lot of folks are talking about movies, Spencer. I like to talk about movies. I enjoy a good film. I enjoy the cinema, and I enjoy making money. So there you go.
All right. A lot of juice, a lot of trades. You can get them all by clicking the link in the description or going to the link that's on the screen, and you can find out what Jeff owns. Jeff, I'll see you tomorrow on the morning show. I guess we're talking Cracker Barrel, and we're talking Chewy, and we're talking Casey's, and I don't know.
Start driving now, Spencer. You should do it remotely from.
There's
from
one in
Iowa
Ohio, which is like 2 states away, so it's not.
You're right there. You're practically there. It practically pays for itself. You can have a nice slice of pizza and probably get pretty affordable gas.
That's right. All right, I will see you all at Casey's in Ohio at some point in the next 6 hours. And if I don't see you there, I'll see you on the morning show tomorrow. Jeff Macke, always a pleasure, sir.
Little slice of heaven. Happy motoring.